Have you ever really thought about the invisible systems that pretty much run our world? I mean, the fundamental rules of trust. It's what gives our money value, what holds up our financial markets, and, what's being totally rewritten by new technology right now. Okay, let's get into it.
So take a look at this, a banknote. At the end of the day, it's just paper and ink, right? So what in the world makes it worth anything? Well, it all boils down to one simple thing: trust. We all just collectively agree that it has value. It's a shared story that we all buy into, and that story has been told in some very different ways over the centuries. For most of human history, that story of trust has been written and enforced by some kind of central power. Let's think of this as the old world, a world governed by the rules of centralized trust.
It's kind of wild when you look at how the physical form of money has changed. I mean, it started as just debts carved into clay tablets in ancient Mesopotamia. Then you had the Kingdom of Lydia come along and introduce standardized coins. That was a huge leap. Fast forward a bunch, and you've got Kublai Khan forcing everyone to use paper money, which totally blew Marco Polo's mind. And today, we're in the age of fiat money, which is a fancy way of saying it's backed by nothing more than our trust in the government that issues it.
So here's the key takeaway. It doesn't matter if it's clay, gold, or paper. The operating system underneath it all has been the same. There was always a central authority, a king, an empire, a modern government, saying this is worth something, and more importantly, making sure everyone played by the rules. And believe me, that idea is more important today than ever before. In our incredibly complex global financial system, these centralized rules are what keep things from spiraling into chaos. As Scott O'Malley, the CEO of ISDA, puts it, the stakes for getting these rules right are just ridiculously high. A perfect modern example of this is something called the FRTB. You remember the 2008 financial crisis, right? It just shattered public trust. So global regulators got together to create a whole new, much stronger rulebook for banks. The FRTB is a massive, top-down effort to rebuild that trust by telling banks exactly how they need to manage their risk. And this really shows you just how complex that is. Getting these new centralized rules in place is a monumental task. It's being rolled out across the world's biggest economies over years and years. It's really the old model of trust building, just scaled up for the 21st century. But here's the twist. While the old world is busy building up its walls and reinforcing the rules, a whole new world is being, hacked into existence. And it's built on a completely different idea of trust. This is the really radical question at the heart of it all. What if you didn't need a king, or a government, or a big bank to act as the referee? What if you could build trust directly into the system itself, using just math and code? And of course, the most famous answer to that question is blockchain. At its core, it's basically a shared public record book, a ledger that isn't owned or controlled by any one person or company. The trust isn't in one place, it's distributed everywhere. So how does this actually work? Well, picture this chain. Each block is just a list of transactions. And the magic is that each new block is cryptographically sealed to the one before it. It creates this unbreakable chain. If you wanted to go back and change something in an old block, you'd have to redo all the math for every single block that came after it. It's so hard to do, it's basically impossible, which is why we say the record is immutable. It can't be changed. So let's put these two models side by side. The old world relies on a single trusted entity, like your bank. But that's also a single point of failure. The new, decentralized world spreads that trust out across the entire network. There's no single weak point to attack, and no central authority that can be corrupted or can censor transactions. These are basically the superpowers of blockchain. It's decentralized, so nobody's in charge. It's persistent, so the record is there forever. It can be anonymous, and it's completely auditable, because anyone can go and check the public ledger. This combination is what makes it a potential new foundation for trust. But of course, no revolution is ever that simple, is it? Every big shift, every attempt to rewrite the rules, it always comes with its own hidden costs and complications. To really get this, let's step away from the digital world for a minute and look at another massive disruption that's happening: the shift to electric vehicles. It's actually a great example of how even the most exciting revolutions have hidden costs. Now, there's an analysis from a group called the Friends of Science Society. They're a nonprofit that is skeptical of mainstream climate science. And they argue that the story of the EV transition isn't just about a new technology winning on its own merits. They say it's a system that's being propped up by all these layers of subsidies. Everything from our tax dollars funding R&D, to direct government grants, to the tax credits you might get when you buy one. And to put a real number on this, that same analysis points to deals like the one in Nevada. They report that Tesla receives subsidies worth a staggering $1.2 billion for its Gigafactory. It just goes to show how much government support, which is a form of that old centralized influence, is playing a role in this big tech shift.
And this is where it gets really interesting when you look at the unintended consequences. That same source points to U.S. data that suggest federal EV tax credits end up disproportionately helping the wealthiest households. According to their figures, the top 20% of earners get 90% of the credits. It's a really powerful reminder that even with revolutionary tech, you always have to ask the complicated question, who really benefits?
So this brings us to the biggest question of all. As these two worlds, the old centralized one and the new decentralized one, smash into each other, what are the rules of the future going to look like? Okay, so let's just recap the journey we've been on. For centuries, our whole world was built on trust in a central authority. Now, technology is promising a new kind of trust, one built on code and shared by everyone. But as we've seen, every revolution has its own hidden rules, its own costs, and its own consequences that we are just now starting to figure out. Which leaves us with this final thought to chew on. As we start rewriting the fundamental rules of our world, whether it's in finance or transportation, are we actually solving the old problems of fairness and stability? Or are we just creating a whole new set of problems to deal with? That's the big question we all have to grapple with now.